So last month I released a video talking about my investment strategy for the future, and yeah, I got a few things not wrong, but wrong. So in this video, let me tell you what I realized from 1 month ago, nearly today, and what I've done differently going forward. If you're interested in this sort of content, make sure you are subscribed with your notifications turned on. Let's get into the video straight away. Welcome if you're new here, welcome back if you're not. My name's Jonny Bradley, I'm founder of the Seller Pro Academy, where we help ordinary people create extraordinary things, just one product at a time. So, to recap what happened in a video about a month ago, I was talking about my new investment strategy and I was going to put money into stocks and shares and all sorts of cool stuff. And this came from a little bit of research, but not too much research. I just wanted to get started and get stuck in. So I had two strategies. One, that I was going to invest in funds like the S&P 500, the FTSE 250 using a stocks ISA. And the second was just going to be buying some stocks on Trading 212 and just kind of trading sometimes or maybe trading never, but just really buying some stocks of companies that I liked. So I ended up investing £500 into the FTSE 250, £500 into the S&P 500, and that was my kind of stocks ISA account. And then I ended up buying one Tesla stock, two Apple stocks, one Beyond Meat stock, one Facebook stock, and then 4% of an Amazon stock, which brought me to about £1,000 invested on that platform. Literally immediately after buying all this, everything started losing money and it started going into the negative, and I wasn't really worried about it because this is a long-term strategy, but of course you can't help looking at the start, and yeah, I was like, maybe I bought the wrong time or whatever. Either way, everything's profitable now. I'm up, not by much on the stocks ISA, I'm up by about 7%, so again, not a huge amount of money, and on the general stocks and shares, I'm up a little bit. However, if I take you through it, most of that has come from Tesla. They went up by 25%, so I've got my notes right here. The worst being Beyond Meat, which is down 35%. So potentially bought that at the wrong time. But again, these are long-term investments. Not really that concerned with it. Either way, I've kind of got the bug. I got really interested in it. So I decided to look down other routes. Since then, I've linked up with a fantastic company and a financial advisor who has shown me more efficient ways of spending my money. This company in particular, they manage money for a few of my friends, so I know they're good and I know they're reputable. So I decided I'd have a consultation and just really figure out what they can do for me. One of the big things they made me aware of is where I'd been missing out on investing quite a large sum of money for the past few years and I hadn't touched it at all, and that was a pension. Previously, when I think of pensions when I was working, I think, oh, there's just a little bit of money going out my account every month or going out of my payslip. I'm not really worried about it, not really concerned. Like, yes, you have to have a pension. But then I started to look at it from the point of view that was made aware to me by this financial advisor. And this has really changed my mentality about what I'm going to be doing for the future. So previously, for the past few years of having my company, I've not put any money into a pension, nothing at all, not £0. So what they told me is that I can put up to £40,000 a year tax-free into my pension. And the key thing here is tax-free. This is very important. Anything where it's tax and free, my ears pop up and I listen to it very, very attentively. And even better than that, because I haven't been putting into my pension through my company for the last few years, I can actually backdate it 3 years. And because you can put into £40,000 a year, I can do a lump sum today of £120,000 tax-free into my pension. Now, I'm not necessarily going to do that, but this is something very important which I didn't realize. First of all, when you pay into your pension through your company, it offsets your corporation tax. So at the end of the year, you have your company accounts, maybe just before you filed your accounts, you might see that you have some operating profits. At that point, rather than pay corporation tax on some of those profits, you can just put some of that money into your pension, which means it's a more tax efficient way of getting your money, be it in the long term, and hopefully stopping HMRC from getting their greedy little mitts all over it. So obviously looking at the numbers and thinking, okay, well, how much could I put into it? Using my tax-free allowances, it adds up to about £60,000 a year. Now, if you were to extrapolate that over the next, maybe let's say 20 years, it means that I would basically be able to get a six-figure or well over a six-figure income from my pension and my ISA until the day I die, okay, which is incredible. I even worked out what I'd have to put in, and some of this would be tax, to retire at 40. So unfortunately for me, 10 years time, and be able to get the same level of income. And that would be £160,000 per year. Now, that I'm not too comfortable with doing that. I'd much rather be able to reinvest in the business to be able to use that money now. However, it's certainly something to work towards if I do want to be able to retire early. So they took me through the process of how they actually invest their funds, how they have managers looking after the money. And of course, there is a percentage that you'd have to pay for that. However, I'm happy to pay that. I'm happy to be able to take that slightly less amount of gains to be able to have my money managed properly. The only thing I'll then be doing myself is, again, the general stocks and shares for companies that I just want to invest in or I want to trade with, and cryptocurrencies. So it's now the beginning of December, and this has now officially been happening. As of the 1st December, I've managed to put £2,000 into the pension every month, and there'll be £500 from my personal balance going into a stocks and shares ISA. Now, the mathematicians among you will understand that those don't actually reach the limits. £2,000 a month is £24,000 a year, not £40,000. And the reason I decided to do it that way is to have those continuous contributions, and at the end of my financial year, or just before the end, then look at if I can top that up to the full 40k, which is always important when you want to be able to reinvest in your business, which is of course what I'm always wanting to do. With the personal funds, generally speaking, I like to take as little money from the business as possible to, pay my own expenses. And for me, currently, I'm actually about to move into a brand new home, which I'm really excited for, just waiting for it to complete and get the contract signed. And that's going to cost a lot of money, and I'm going to be fitting it out, furniture and all that sort of stuff. So I thought, rather than go the full whack with £1,666 per month for the personal ISA, I thought, do you know what? I might taper this, because some of that money is much better spent actually in my pocket to be able to be used for this new house, which I'm super, super excited for. And of course, with any strategy, you need a plan. So my plan for this is to look at this every 3 months to then see how I can optimize it and again get up to that £1,666 per month invested. Some of the things I'm even thinking about, which I don't know if I should do, maybe let me know in the comments, is getting rid of my car. My car cost me a lot of money, and to be honest, I could get a lot cheaper cars through my business, 100% tax-free. For example, all electric cars, doesn't matter if it's Tesla, Porsche, or anything like that, you could have them as a complete business expense. So all of the corporation tax is completely wrote off. So when I think about this, and I haven't made any decisions because I still absolutely love my car, and I think there's probably another year of me owning it before I do chop it in for something else. But I think at that point, I'll be buying an electric car through the company because of the tax write-offs, and then putting that money that I was originally spending on the car into investments. So I'm not reducing my expenses, I'm just maneuvering my expenses so that I'm putting more into investing and less into, depreciating assets. I don't really want to get rid of the car. However, it's something that I've definitely been thinking about when you consider the amount of money that's being spent on it versus putting that same amount of money into stocks and shares is completely different. You're looking at making money and you're looking at losing money. On the one hand, I've got the enjoyment of this lovely car, but it's definitely a depreciating asset. And on the other hand, using that money for investments means that I can't actually benefit from it now. I can't get any happiness from that money right now, but I will be able to get happiness from it in the future. Let me know in the comments, should I get rid of the C63, bi-turbo V8, absolute beast of a machine, and chop it in for an electric car that just goes. Thing is, knowing me, I'll probably get the electric car. I'm thinking, I'm doing the right thing. I'm being sensible with my money. And then I'll go, I really do miss an engine. We'll see. One of the other things I will be putting a little bit more time and attention to is cryptocurrency. And the reason being is because a couple of years ago, I bought some cryptocurrency. I didn't really do much with it. And it's just been sitting there and, gaining value, losing value, gaining value, losing value. And I should have been actively looking at the price of Bitcoin, because there's many times like March of this year where I was thinking, shall I buy, 1 or 2 Bitcoins? They were like $3,000 or $4,000. And I was thinking, do you know what? I probably should. I can see that they're probably around the bottom at this point. And I didn't do it. Now they're at 19,000, nearly 20,000, and I could have sold those, made a tidy profit. But again, I just didn't because I wasn't keeping an eye on the ball. So I think from now going forward, I'll be keeping more of an eye on the ball on that. Again, if you want to have updates on that, please let me know down in the comments and smash the like button. That's it for today. Make sure you are subscribed with your notifications turned on, and I'll see you all very soon. Bye-bye.